All right, guys, welcome in. Today is January 21st, Sunday. We are live right now, 7 p.m. New York Eastern Standard Time. Welcome in, everyone. I am your host, CZA. We're going to go over a couple of indices, metals, and Forex pairs for this upcoming week. And we're going to identify points of interest to see, pretty high quality areas in which we can trade whatever strategy it is that you are trading, right? So we do have a lot of strategies in the Discord under the user strategies. I usually do SMC, which is also referred to as ICT, Inner Circle Trader concepts, which are smart money concepts. That's usually what I trade. It's pretty much what I've been doing for the past few months, and I feel super comfortable with it. But at the end of the day, you can do whatever strategy you want, and it's going to be profitable as long as you have the proper risk management, right? So I've actually noticed with a couple of friends, like we trade all different styles. Everyone's doing their own thing when it comes to the strategy, but risk management is there and they're profitable. I'm profitable. Sometimes we go into the same trade in opposite positions and we still come out taking profit. Crazy, right? So don't focus too much on getting the perfect 100% win rate strategy when it comes to your strategies. Just focus on having a proper strategy, proper risk management, and don't FOMO into trades. Now, without further ado, let's get started with the news. So for this upcoming week, we're going to look at red folder news. What I try to identify is red folder news for the pairs that we're trading, and also red folder news when it comes to USD. USD is going to affect the entire market. So if you're in a trade and if you have red folder news, move your stop to break even as soon as possible, or try to get out of the trade if you're profitable. USD affects the entire market, so you're not safe. Even when I was trading GBP, JPY, completely reversal on that trade because of a red folder USD news. Same thing happened to me when I was trading some exotic pairs. USD news still affected it, right? So that's how we're going to go over the news, identify those red folder. Now, Sunday, we don't trade the Asian session, but we don't have any red folder news for us right now. Monday, January 22nd, that's when we're starting this entire trading week. We have red folder news for JPY, right? Japanese yen. Tuesday, we have red folder for JPY again. So we have two red folder JPY on Monday. We have one here for JPY, a couple yellow, not really too important, but good volume driver there for the volatility. New Zealand dollar, red folder here. I don't really trade the New Zealand dollar. Doesn't have enough volatility for me in order for me to get, a decent amount of profit out of it. Wednesday, we're looking at the euro. Euro, you got four here, another one here, but that's not red folder. So we have four red folder for euro. We have two red folder for British pound, right? So these European pairs here, Canadian dollar, US dollar, red folder here at the exact same time, 9:45 a.m. That's on Wednesday. Careful trading the USD. Thursday, we're looking at euro. We're looking at USD, and we also have some orange. Orange should be a continuation of the red folder news here, but it all overlaps together at 8:30, so you should see some volatility. So you have five highly volatile news right here on Thursday for the USD. So be very careful. I'm probably not going to trade it due to the fact that it's so much red folders for this week. But who knows? We'll see how the price action is acting. I'll probably enter like a small percentage, probably like a 0.5 instead of a 1%, due to the fact that it could go anyway. But it just depends on the price action. So if I do trade it, it's going to be very low risk, but most likely I won't trade on Thursday. Friday, we have one red folder at 8:30 a.m. That's going to be your core PCE price index. This one's going to be really, really volatile, which is great, but I'm probably not going to trade it, right? Because I did back testing. Fridays are not good trading days for me, so I'm just going to stick it out on Friday and pretty much avoid that, right? So let's move on to the charts, right? So let me change over the window here in Discord, and you should see my charts live right now. So first chart we're going to go over is going to be NASDAQ. We're going to pull up the NASDAQ futures charts on TradingView. This past week, NASDAQ just broke up another all-time high, right? If we're looking at the monthly, this is the highest it's been live, right, ever. But let me show you something here in TradingView. You're going to see what the contract prices are when it comes to futures. Futures pricing is a little bit different when it comes to the contracts versus what was actually played out into the market. Now the future contracts themselves expired at 17,700. Those are your futures contracts, right? We are looking at the futures liquidity right here when it comes to the NASDAQ mini futures, right? NQ1 exclamation point. But for like the live actual feed itself, it has not traded at these levels, but the futures were valued at these levels, right? So we should be expecting a liquidity grab over here when it comes to the contracts. Now, I typically don't trade with the contracts enabled, but it's just so you guys can see a little bit of insight as to why I labeled this as all-time high contracts, right? We should see some kind of reaction at this level here. And then that could be, you know, breaking this all-time high and actually trading this live. So instead of this being a contract, it's actually going to be live price action. So we're going to disable that so you guys don't get confused, but just so you can see why I labeled that area as how I labeled it, all-time high for contracts. Now, if we're talking about the live NASDAQ market, we have never traded above this point before, and this is the highest we've ever been here. So we're looking at it on a monthly chart, right? So we're just forming new all-time highs, higher lows, extremely bullish. Let's check this out on the weekly time frame. Weekly time frame, we're forming higher highs, higher lows. It's just continuation here. It's just a beautiful continuation. You can see we had a nice little rejection over here at 10,000. We're talking about October 2022. Over here is January 23, right? Last year, this time last year. And then just continuation up since then. Let's break it down into daily. How's the daily looking? Daily is looking extremely bullish. Check this out. We identified these areas here last week. And let's see, did we tap into these? We tapped into this 1 hour fair value gap 50% range. So if you guys mark that out and you set your alerts, you could have gotten into this as a nice little entry right here. This is on the 1 hour chart, right? Let's check out how that price action worked out. So if you were part of the live last week, you would have got this entry. That's insane. That's nasty. Wow. You'd have gotten into that. All right, that's your 1 hour fair value gap marked out from over here. This bad boy over here. You would have set your stop loss over here. And if you would have done your 2-to-1 price take profit, right? Stop loss here, 2-to-1. Insane. Imagine if you let a nice little runner 20% go, you'd be sitting right now at 11R with that 20%, right? Insane levels. So this is why it's so important to trade off these points of interest, identify them and set your alerts. You would have played that one off very well. So that hit that. That's beautiful. We're going to remove that because now it's been mitigated. I don't want you guys to get confused. This is no longer live, but just so you can see like how important it is to trade off these key levels and these points of interest. So let me just get rid of this here. Oh, the way to here. Beautiful. That was a beautiful tap into that area. So now daily charts, right? Daily levels. We're going to identify the nearest daily levels. We have this fair value gap here that formed Thursday. This candle closed on Friday. So now this is a perfect fair value gap right here, right? We're going to identify this area here. It's kind of nuts. It's so bullish. I wasn't expecting to see these levels for a while. So we're going to mark this out here. And then we're going to Alt H. We're going to color this blue because we are bullish. Coordinates for this line, which is the 50%, 17,045. We're going to label this as the daily. Fair value gap, 50%. Ooh, and I made the text blue instead of the line blue. That is my bad. There we go. Right, so that's what we're looking at. We want to mark that also. We want to send an alert. We're expecting to get tapped into the zone again. And remember, this is the futures charts. So to get in the most accurate entries for you guys, you have to have your broker open. Now, if you don't have a broker that's available on TradingView, let's say for example, Think Markets, right? Then the best thing you can do is get Black Bull Markets. It's the closest one in terms of like spread, probably like $50 to $75 difference. That's the closest one to that. ACAP has its own broker charts on TradingView, which is great. So if you have any prop firms or any brokers that use that as their live feed, that's perfect for you. But in regards to that, this is going to be the most accurate chart when it comes to NASDAQ, the futures chart. Now, so you guys don't get confused, let me remove some more indicators. Right, so we identified this area here. This is going to be our nice, beautiful point of entry. We set our alerts. So when that alert goes off, this price action, it's going to pretty much follow the price action of the other brokers as well. So this one's going to lead the price action, and then once this alert goes off, you can pretty much trade off the other ones as well, because it should be in the same area. So now there's another fair value gap over here that's forming, but we have to wait all the way until Monday closes. This is going to be in 22 hours. So tomorrow in the Asian session, this candle is going to close, and then we'll know for sure if another fair value gap here developed. Let's go down to the 4-hour chart. See what else we see. 4-hour chart does have a fair value gap here, right? Do we have an overlap over here when it comes to the daily fair value gap? No overlap for now. We have a fair value gap over here. We will mark this out. The 4-hour is a very key level for us as well as the daily. I like to trade off those levels. All right, we mark that. The level for this 4-hour is 16,917.75. Let's label this 4-hour fair value gap, 50%. Beautiful. We also have another 2 fair value gaps over here. These are very important, right? We're gonna have some news this week, so we'll see it affecting these levels. Let's label you 2. Let's label you. I feel like here's gonna tap into it soon, so I'm gonna keep that one close. This fair value gap here, the closest fair value gap, it's going to be 17,322.75. We're going to label this as 4-hour fair value gap, 50%. Same thing with this one. 4-hour fair value gap, 50%. Corner nets are 17,137.50. We have these marked out. Set an alert on all of them. We want to play off as many of these levels as possible. If you need entry models as well, remember there's 8 different entry models. I posted it here on the Discord last week. I will post it in here again. So I'm going to post here in the Discord chart patterns that you guys definitely should be looking at if you're doing retail concepts. I'm also going to post into the 8 entry models, because I want you all to be able to know how to enter these areas once you get down into there. Just give me one quick second to put the entry models into the Discord. And then these are the entry models I'm looking at when I'm looking into these areas at lower time zones, lower time frame, excuse me. So your entry is going to be on the 5 or 15 minute time frame. We're going to be looking at these points of interest in the daily, in the 4-hour, and 1 hour. 1 hour is not going to be the highest quality. 4-hour and daily, 4-hour, daily, and weekly are the ones that we're aiming for. But on the 1 hours, trade with the trend, and you're going to see that it does pretty well as well. Right, so we identified the 4-hour. Let's go down to the 1 hour. Give me one quick second here. 1 hour, we have this 1 hour within the 4-hour fair value gap in between 2 different fair value gaps. And you have another fair value gap here on the 1 hour and another one over here on the 1 hour. Because this 4-hour fair value gap is in between these 2 fair value gaps in the 1 hour, I'm just going to keep it to this one here. This is going to be the higher probability one. So I'm not going to use the mark these out because I know it's going to tap into this probably wick into here and then just continue on upward. So we're just gonna leave that as is right there. Daily fair value gap still good over here. Overlapping with the 1 hour. We have these two here. So for the scalpers out there, let's mark these out. These are not going to be as high quality as the 4 hour, but you will get some rejection and you will get some volume and movement on lower time frames. So these are for the scalpers out there, right? The 1 hour. I'm going to label these. Where you at? Alt H. Just watch price action when it gets into these levels. They work really well. Coordinates for the first 1 hour fair value gap is 17457.50. We're going to label it 1 hour fair value gap, 50% mark. There's quite a bit of fair value gaps forming in the past few days. That's due to price action being extremely bullish. Right, we marked out these 1 hour. So we've identified daily, we've identified 4 hour, and we've identified 1 hour fair value gaps, which are going to be our points of interest and also our points of entry. Does anybody have any questions for me in regards to NASDAQ? Any questions whatsoever? If you guys don't have any questions for me on NASDAQ, let me get 3 thumbs up in the chat, and then we'll move on to the next pair, which is going to be gold. Let me get 3 thumbs up in the chat, and then we'll move on to gold. I got 1 thumbs up, 2 thumbs up, 3 thumbs up. Let's ride. We're going on to gold. Insane setup. I love OTE. So last week we marked this out together. Did we mark this out? Yeah. We wanted it to come up here. What did it do over here? That's beautiful. All right, cool. I don't want to confuse you guys. We're looking at gold right now on the daily. It's looking like it's going bearish, right? We're doing lower lows. Here's a lower low, and then here's a lower high. Then you got a lower low here. Lower high is forming. You have a fair value gap with a market structure shift here. We're looking bearish, right? We had 3 different levels here, 50% levels, in which it was supposed to reject off. It did not. Here, it did not either in the 1 hour. And then on the daily, look at it on the daily here. We're on a daily level now. Bounced off here, tapped into this fair value gap, and now there's continuation to the downside, right? It's higher probability for this to continue the continuation down due to the fact that it tapped into this already. Now nothing's mitigated here. This money's been tapped into, but we should have seen a more violent move upwards. You have this wick, which is the nice, beautiful rejection wick off the 50% line here. So let me show you. 50% almost to the pip. It's insane. Right? Almost to the exact pip. That's insane. Right? The 50% mark. That's pennies of a difference. Right? So that's how powerful those 50% areas are. So this already tapped into it. We're going to label this red because we are bearish now. We're looking at the price action move down. I placed a few alerts up here thinking that the price action was going to go up there, but who knows, right? We're going to keep an eye on those red folder days in regards to gold, but on the daily, we're bearish. Let's go down into 4 hour. Let's see what's up. 4 hour, you have a fair value gap over here. Right after this fair value gap, we got to see. We had a bullish fair value gap here because it wanted to go up, but we never got a market structure shift. It tapped into that, mitigated this fair value gap, and now it's going down. So we are bearish. I don't see a good entry point To tell you the truth, we have this fair value gap here, but it is so weak in comparison to the entire overall trend on the daily. It is bearish. We have a fair value gap up here. Maybe it'll tap into there because of the news that we have coming up this week. So let's mark that out. We're gonna mark this out here. We're gonna move this one because that's mitigated. This is a level that we want to see price action play in. If it's rejected on there, then we are confirmed to go bearish if it even goes up there. If it breaks through, then we should be expecting to land into these zones here, which are 2064, your 2069, and also your 2075 areas, right? If it breaks through that, candle closes above it on the 4-hour, continuation upwards, targeting all-time highs at 2079. Coordinates for this 4-hour fair value gap are 2046.37. We're going to color this red. We're going to label it as well, 4-hour fair value gap 50% mark. I don't think price action will go up there, but it's all speculation at this point, right? Like, we don't know for sure. Price action is going to do whatever the fuck it wants. And we do have red folder news that will cause it to wick into these zones here. What I like to do as well for a little bit added confluence, OTE, right? My OTE fibs, my optimal trade entry fibs. I'll share with you my settings as I do every week for all the new viewers. But I'm drawing this to make sure there's a confluence between the fair value gap and the optimal trade entry lines, the zones. This is my settings here. Take a screenshot. I use 1, 0, 0.62 is an entry. 0.705 is one entry as well. 0.79 is the last entry. Targeting profit, right? Your take profit, it's going to be negative 0.27. Take a screenshot, modify your settings. This is what I use. You can color it whatever you want. Now, what we're trying to see is an overlap of the 705, the 79, or the 0.62 with the fair value gap. And as we see here, 0.79 and the 0.705 have the fair value gap in between them. You also have here an order block. Look at this beautiful order block. The order block zone itself is right here at the 0.79. So this right here, this fair value gap plus the order block overlapping the 0.79, that's going to be my point of entry if price action is supposed to retrace back into it because of news. So this is what I would do, right? I would set my limit order there, limit sell, and then the structure itself. If it breaks the structure where I drew it from, that means that price is just going to continue going up and then target all-time highs. This is my point of entry, and then I target 0.27. You guys are welcome to do whatever you want. This is just my strategy. This is not a signal. This is just to show you like what's in my head when I'm going through setting limit orders, right? So due to the fact that I have 3 different confluences, I have a fair value gap on the 4-hour fair value. I have a 4-hour fair value gap over here, going along with the trend, which is bearish trend, right? We're looking for bearish entries, bearish movement. We have an order block here that's overlapping my optimal trade entry. The fair value gap also overlaps the optimal trade entry as well. So those are my confluences. I have 1 confluence, 2 confluence, and then the order block, that's 3 confluences. 4-hour, which is a high time frame confluence. So let's see what's up, right? Let's see what happens. This is what I'm thinking. This is my mindset. This is what I feel like price action is going to do. But at the end of the day, like I said, price action can do whatever the hell it wants. This is pretty sweet though. 3 different confluences. Let's go. I like it. Let's see what price action is looking like on the 1-hour. 1-hour looks pretty much the same, right? We're looking at entries in these zones here. You have a fair value gap. The 1-hour fair value gap overlaps the 4-hour fair value gap 50% mark. So now we just added an additional confluence. That's 4 different confluences. This fair value gap here has already been tapped into and mitigated, right? That was a daily and also 1-hour overlapping in the same area. Tapped in, mitigated. We tapped in here, fair value gap bullish, mitigated. This one has not. So yeah, we're expecting price action to come and play around here again, and then shit the bed and just go straight for our take profit, right? That is what we want price action to do. And we'll see, right? We'll watch it play out. Hopefully it does, but who knows, right? Gold's super bullish lately. And yeah, I mean, we are in a bearish trend, so I mean, it only makes sense to go with the flow, right? Nice little scam pump, like, you know, Error says for easy crypto, right? Scam pumps is going to be just a liquidity grab, shoot up, and then just dump right after. So that's what I'm expecting to see here as well. Does anybody have any questions for me on gold? And also let me know if I'm going a little bit too fast, because I'm actually, I don't touch these charts the entire weekend. I touch the charts with you guys. So I get kind of excited too when I'm looking at these like beautiful entries that come up, especially with the confluences. It's just like, oh, it's amazing. I'm also going to set an alert. Almost forgot to set my alerts, right? And like I'm going to set a limit order, but I got to set the alerts too. This looks really good. Anybody got questions for me for gold? If not, give me a thumbs up and we're moving on to Euro USD. Let me get 3 thumbs up and we'll move on. I got 1 thumbs up. Gotta make sure you guys are paying attention, you know? I got 2 thumbs up, 3 thumbs up. We're moving on to Euro USD. Let's go. Pulling up the daily chart on Euro USD. Please tell me you guys traded this. I know we went over this together. Oh my goodness. This is the daily. Look, this is a Monday. This is what price looked like on Sunday. This is what price was on Monday. We went over this. We identified this level. It's a daily and a 4-hour fair value gap 50% mark. And we call this a high confluence trade. I know Mozzie was here for last week's trade. I know we marked this out together, right? So I even set my alerts on this level as well. And look what price action did. Tapped into here, almost to the pip, right? Let's zoom in a little bit closer. 1 hour. Insane wick. Let's go down to 5 minutes. I want you guys to really appreciate this. Really appreciate this. This is on a 5 minute. Look at that. Imagine if you were scalping this, right? Off these levels. And then you caught this with the fair value gap here, entered the fair value gap, and then continuation up with a 2 to 1. Piece of cake. Now if you didn't get that entry there, you would have gotten the entry over here at this fair value gap. And then continuation. Piece of cake again. Right? Insane. And then here I have another fair value gap here. You could have gotten into. It's just non-stop. This fair value gap here too. You got it over here. So yeah, I mean, this is why it's so important to identify these points of interest levels. So last week we identified this area here, and look, 5 minute entry would have been a beautiful trade for you guys. So let's go back to the daily. Let's go back to the daily. And then this level, we're gonna remove this level. But gosh, it was so beautiful. So I'm gonna take a picture of this because you guys don't realize how beautiful these levels can be if you trade off them. So let's remove this. It's already been mitigated. Now the next level we have that it should be targeting is a weekly fair value gap 50% mark. But let's also see where it's going, right? Where's price action going now? Rejecting off this fair value gap on the daily. Price action should go tap into this order block here. So we're going to label this area here Asquerosa. And this is going to be the entry to the order block. All right, let's label that. With fair value gap over here, it's been tapped to and mitigated. So then I would say target this as your take profit 1. Take profit 2 is going to be your structure over here. There's not really anything else in the daily to target, but I'm going to mark those out, right? So your point of entry was over here. And then I would mark these levels here as the order block entry. And then buy side liquidity. Let's actually remove this here. We're going to label this as a buy side liquidity zone. Coordinates for that are 1.09990. That's 3 nines. This is our buy side liquidity. And then this zone here, this entry to the order block is 1.09300, right? So on the lower time frames, you should see some kind of rejection off that. Let's go down to the 4 hour, right? We don't have anything new when it comes to the daily fair value gaps. Everything has been mitigated. Let's go down to 4 hour. Let's identify those 4 hour zones. We have the closest 4 hour zone over here. It's been tapped into the 50% mark. It's been mitigated. This has not been tapped into yet, but it overlaps the order block entry zone here. So we should see some kind of rejection. So let's label this and let's color it. This is going to be our 4 hour fair value gap 50% mark. This is a confluence right here, right? So you have your 4 hour fair value gap 50% overlapping with the order block entry zone, because all this area here is the order block on the daily, because you have those massive candle wicks there, right? So it overlaps in this little entry zone. So we should see price action tap into here and then die and just shit the bed straight into this weekly fair value gap 50% mark. Reason being is that there's nothing here holding it down, holding it up, excuse me, anymore, because we tapped into that fair value gap that had the daily and the 4 hour overlapping together. So now it's just going to free fall straight through that because nothing's going to hold it back. The only thing holding this from going to the top is this 4 hour 50% and also the order block here. Let's see what the optimal trade entry looks like. Our OTE. So let's draw from the top to the retracement. And then as you can see here, the 0.62 line overlaps with the fair value gap area. And then you have the 0.705 in what looks like to be a support area turned into a resistance. See, it's wicking off that area and then continuation to the downside. So those are going to be our 2 DCA areas. You also have the 0.79. And then as you can see there, it wicks off those areas too. So these are nice little confluences for our DCAs. I would enter here on the 0.62 because it's inside the fair value gap. So, and you have 3 different confluences. You have the 0.62 line, you have the 4 hour fair value gap, and then that's the order block entry zone. So you could do 0.62 and the 0.705 as your DCA entries for this. So if you were here, I would write it all the way up to here, right? Take 80% and then just see if the runner goes a little bit higher into the structure, which is the buy side liquidity. And if not, that's fine. You had your runner and 80% take profit. It's good enough, right? 1 hour. Let's see what the 1 hour holds for us. A fair value gap overlapping the 4 hour. So that's a fourth confluence. You have the 1 hour and the 4 hour overlapping 50% mark on the fair value gap. You have an order block entry in the same area, and then you have an OTE fib drawing over the same area. We got 4 confluences there, folks. So this is going to be a nice high quality trade for us. We're looking for shorts. We're looking for a bearish price structure. We're looking for bearish momentum. All right. So we identified the daily, we've identified the 4 hour, and we've identified the 1 hour price action and points of entry. Does anybody have any questions for me when it comes to Euro USD? And also let me know if I'm going a little bit too fast, guys. I know we do have a lot of beginners here. If there's anything that you don't understand, please let me know. We'll go over it. What will your stop loss be for this short? It's a good question. So look, if you were able to get this entry, which is right here at this line, price action should be in the first candle that caused the fair value gap. So the fair value gaps are usually 3 candles, 1, 2, and 3, right? So you do it from the base of the first candle of the 3 candles that form the fair value gap. So for example, here, we're going to color this blue because this is that bullish, beautiful bullish fair value gap that I rejected off of. We do have a lot of news this week, so it could cause us to get stopped out. Or who knows, right? Stop loss would be right there. And then your take profit's going to be 2 to 1. Right? It's usually 2 to 1. But the fact that you have this zone here with those 4 different confluences, I would just take 80% there, which is a 1 to 1. Not the best risk to reward ratio, but it is what it is, right? It's a nice high quality trade. Or if you want a better RRR and you didn't get into this entry, since we are in bearish structure and we're looking for bearish positions, just short, right? Don't FOMO into the trade. It's going to come your way. Right? Do the price right here at the 1, which is going to be the wick on top of the buy side liquidity. You can add a few pips too if you want. And you target over here the weekly fair value gap 50% mark. That's going to give you a nice 2.22 to 1. And then you have another daily 4-hour week, 4-hour 50% over here. This is the weekly. So you can probably tap into this one too. Right? So watch the price action when it gets down to here. You can probably do 80% here and then the rest 20% there. Or just take profit 1 over here. Because if that's on a weekly level, it just has to be a wick on the weekly, which means on the daily, the 4-hour, the 1 hour, it should break through and tap into that and then come right back in. And then we close out the week above it as a wick. So this is a pretty good zone to aim for. That's going to be a 2.57 to 1 ratio if you're targeting from the 0.62 line. Now, if you enter as well as a DCA from the 0.705, you're looking at a 3.45 ratio, right? So if you're 1% risk to reward, if you do 1% risk to reward, right, you guys can do whatever you want. You can do 2%, don't do more than 3%. You can do 0.25% if you want, 0.5%. But me, I would do 1%. That's what I do. Not financial advice or anything like that. I'm not telling you what to do, just giving you a little feedback on what I would do, right? So if I would to DCA into here, I would do 0.5 at the 0.62, and then I would do 0.5 at the 0.705. So 0.5% at each one of these 2 levels. And then one is going to yield 2.5 minimum, and then the other one's going to yield me 3.45 minimum. Right? That's a nice little risk to reward on 1%. So you make 1.5% on one, and then you make a little bit over 1% at the other one. It's perfectly fine once that kicks in, right? So yeah, Mazi, this is how I would play it, and that's what my stop loss would be. You could even make your stop loss a little bit tighter, and then it gives you an even bigger risk reward. And pretty much, yeah, if the buy side liquidity gets taken out and it crosses through that, it invalidates your entire movement anyways. So it really depends on how tight you want to make your stop loss, but I would do a couple pips above it. I wouldn't get too greedy. Any other questions as well, guys, for Euro USD? Let me get some thumbs up in the chat. 3 thumbs up. We're gonna move on to GBP USD, and then also while I go over GBP USD, let me know what other 2 Forex pairs you guys want me to trade for you. Not trade, excuse me, chart. We're not trading, we're just charting together. We're planning out the points of interest. And good to see you on tonight, USMC Patriot. It's a pleasure to have you, man. It's always good to see the OGs in the chat. Oh man, look at this Chop City. Look at this chop. What in the world? This is Dookie. Yeah, no worries, man. Just join me every Sunday night and we'll do them together. Like, that's the whole point, right? Like, this is nothing too crazy, nothing too advanced. We're literally just planning out plotting out, excuse me, points of interest together. And it's probably the easiest thing to do, but a lot of people just don't do it. This falls in line with a little bit of discipline, and it's just great, right? It's great for me too. It's made me a better trader, honestly. Just the fact that I can look at the week ahead and just be like, these are the areas that I want to trade in, versus me just trying to chase a trade every single day and trying to force a trade every single day for no reason. So right now in GBP USD, we're really choppy. I wouldn't trade this. I don't trade choppy markets because there's no clear direction on where the market's supposed to go. And you're pretty much just gambling at that point. We have some areas that were labeled before as a daily fair value gap, but that's been mitigated. So we're gonna remove this area here. In the weekly too. Let's check you out on the weekly. What's the weekly look like? Yeah, the weekly would have been nice. So on the weekly candle, because it's a weekly candle, I would have done just the bottom of the weekly candle. And then that would have been, if you do 2-to-1 risk to reward, when did you tap into it? Right here. Would have been the same candle, the same week. We would have gotten 2-to-1, the same candle of the same week. That's nuts. All right, so that's been mitigated. Weekly's been mitigated. Daily's been mitigated. We have a 4-hour fair value gap there. Let's check it out on the lower time frame. Let's see if that's been mitigated. This is just consolidating like crazy. No clear direction. We're gonna remove that there. Let's go down into the 4-hour. Let's check you out. And yeah, that's been mitigated too. All right, cool. So we have no levels to fall back on. Let's check out the 4-hour here. This is a mess. Complete mess. It's too choppy, right? So we do have 3 levels that overlap here. Excuse me, 2 levels that overlap. The next level we're looking at is this weekly 4-hour fair value gap 50% mark. That's at 1.24354. As of now, GBP USD is just chopping up in this area here. I wouldn't suggest trading it, especially if you're a beginner. If you're more advanced and you have nice entries with your strategy, all the power to you. But I wouldn't trade this pair. I wouldn't suggest to trade this pair in this area here at all whatsoever. Just my opinion. So trades in the near future for GBP USD, I don't see anything forming over the next few days. But we'll keep watching it. We'll come back to this next Sunday to see if the market's changed and if it makes any sense for us to trade. We do have here as well another area, 1.23442, that we can definitely trade off of. But besides that, those are the only 2 clear areas that I see. Right now it's choppy. Don't trade it. Just wait until it gets to those areas. Now, Forex pair. Let me get some Forex pairs in the chat and then we'll go over them together. Whatever you guys want to go over. And then take profit, Tim, if you can mute your mic, please. I hear all the feedback from your house, pretty much. Thank you. Guys, what Forex pairs do you guys want me to go over? Let me get some Forex pairs. Don't be shy. Analysis on GJ. All right. Dun dun dun. So bullish. Doesn't want to come down. That's cool though. I wanted it to tap into the daily 50%. Hasn't really mitigated it, but it's still continuing up. Wow, it's so powerful right now. So I broke through with a weekly high of March 2015. We're gonna remove this because it's been mitigated. It's in a buy side liquidity zone right now. So we're at an extreme premium. So we're looking for shorts. We're looking for shorts on an extreme premium. This is a buy zone here. Buy side liquidity, rejecting off this area here. Only wick through it, did not close above it. So the fact that the candle closed below it means it's been rejected. Let's check out. Right, so we have the daily fair value gap 50% mark over here at 182.473. Right, that's still live, and then also this daily fair value gap is still live, 180.836. We are still bullish. We're on a bullish trend. We're gonna mark out this area here. We want to bounce off this and continue upwards. We're targeting the weekly high February 2015, which is 190 flat. We're gonna mark this area here. This is a daily fair value gap 50% mark. Coordinates for this one are 186.749. Do we have anything here? No, this has been mitigated pretty much. We're gonna call this as mitigated because it's close enough to the 50% mark that it's been mitigated. This is the area that we're looking for. This is the closest fair value gap that we have. We want to see it bounce off this and continue up, tap into here. That's going to be our target, right? That's going to be where we wanted to see the price action hit. Let's go down into the 4 hour to see what's up in the 4 hour. 4 hours overlapping with the daily. Let's mark it as that. Daily and 4 hour overlap of the fair value gap. I feel like a tongue twister. Daily 4 hour fair value gap. We also have another one here. It looks like it's close enough to the 50% mark that it's been mitigated. Another one here that's been mitigated for sure. So this area here, it's nice little beautiful confluence that we're seeing. This fair value gap here has been mitigated, but it hasn't been a market structure shift. So we are still bullish no matter what, right? We're bullish. We wanted to tap into here and then continuation to the upside. So we wanted to see somehow this price action, I don't know, tap into this liquidity, dump into there, collect liquidity, and then tap into here somehow. That's the price action that I want to see happen. Let's see what's up on the 1 hour. What does the 1 hour look like? Mitigated, mitigated. And then here is overlapping too. Wow, okay. So you got 3 different confluences on that area alone. So you have a daily, a 4 hour, and the 1 hour. The fair value gaps overlap together in the same zone. Beautiful confluence there. Let's see what this looks like on the daily with the optimal trade entries. All right, we'll pull from the start point all the way to the retracement. And then our optimal trade entry overlaps beautifully with the daily fair value gap here, and then the 7-9 overlaps exactly with this daily fair value gap here. So these 2 areas here, we're going to be looking for longs, right? We're going to be looking for long positions here, and then we're going to be targeting this area here, 0.27. So not to confuse you guys, but we're going to go over this. This short term, we're looking for this to dump into the daily 4 hour, 1 hour fair value gap area, continuation up into this area here. We want to see it grab this liquidity of the weekly high because that's going to be our next liquidity area. We already tapped into this market structure here, which is the closest area. So that means this has been mitigated. There's nothing holding us back. We're going to tap into this area here. I don't see it going all the way up to here, but it could. It definitely could. And then something's going to cause this entire movement to start dropping into these 2 different areas here as a retracement, right? And then when it taps into these areas here, it should either tap into the first one, 0.62, or the third one, which overlaps perfectly with the 50% mark. Right down to like almost the same pip. Very, very tight spread right there. Right, like 2 pips. We should see dump into those 2 areas there. it'll probably tap them both in and then continue upwards into that 0.27 line. So my entry would be something like this. I would probably DCA. I'd probably do the 705 and the 79. Reason being is just to average it out a little bit better. I would target right underneath this sell side liquidity here. That's going to give me a 3 to 1, right? 2.91 to 1. And then I would do the next one. And I'll do the same thing. Same stop loss, same take profit. This one's going to be a 4.2 1. 4.2 to 1. I'm not telling you to do it, but this is just how I'm looking at the price action to be. Now, mind you, I'm definitely going to look at the price action in those areas at lower time frames. So like at the 5 minutes, at the 15 minutes to see if it's going in my favor. I'm looking for one of those entry models that I have there that I posted into the Discord. So I'm looking for one of those entry models to play out in the 5 and 15 minute, and then I'm entering. I could also set a limit order if I see the price action moving the way I want it to on the way there. And if it looks pretty good and it's not violently just dropping, or it could actually violently drop, but then it slows down a little bit around here, then I'll just set a limit order and then let it do its thing. But definitely use those entry models as your pretty much your trading rules, right? Use the entry models and then use that for 5 and 15 minute alongside with your strategy and inside these points of interest in order for that to play out the way you want it to. So this could play out, could not play out, but if it does play out, amazing. If it doesn't play out, then we're looking at market structure shift to the downside, and then we're just bearish from that point on, because once it breaks this structure here, there's nothing holding it back, and then we're officially bearish from that point on, and then we're going to start looking for bearish positions. Kind of like makes it easy, right? Like once you start breaking through the market structures, then you're like, okay, this invalidated the whole move, so that means now I'm bearish. It's that easy. Even if you do get stopped out, then you can just be like, okay, cool, now I'm looking for shorts. All right, let's go to the next pair. We just did JJ. Mazi, you good with the analysis on GJ? And then let me get one more pair, you guys. What Forex pairs do you guys want me to go over? And shout out to Jay. What's up, Jay? I see you in the Discord.
What's good, gang?
What's up, man? Welcome in.
What's up, brother? How are you?
Good, man. It's a pleasure to have you here tonight, man. Thank you for joining.
Yes, sir. Hey, we're about to do some crazy shit soon, bro. There are little changes coming. You know what I'm saying?
I'm super down, and I know I'm gonna start doing some more videos as well for the beginners. So I'm looking forward to doing some education for these guys.
Yeah, we'll do that. We'll do some of that because I got some new shit going on with Matt now. So we're gonna be doing some crazy shit.
Let's do it, bro. I'm looking forward to that.
Coming next month.
Hey, let's go. Guys, let me get a Forex pair. Let me go over the Forex pair with you guys. I know you guys are watching a couple pairs.
Hey, show me AJ. You know I always want to see AJ.
AJ.
What my brother gonna say. Sheesh.
I don't know, bro. Like I know you enjoy it, and sometimes it does look clean.
It looks like it wants to run the highs. It's gonna take the externals. It's continuing to display. You see the candles right now? There's no single liquidation candle, rejection candle, nothing, whatever you guys want to call it. You guys see straight displacement right now, still creating new fair value gaps, all right? So that shows you that the intention is to continue to run the high and trap the shorts in here.
Yeah, and you looking at your lower lows, or excuse me, your higher lows, right?
Yeah.
Boom, boom.
Yep.
Whoa, this one high, this one's low, but then it goes back up. And then you only have this here holding it back, and then you have your market over here. The structure, excuse me, the market structure.
And it's an equal high. It's a double top too, so it's gonna get ran. That's an equal high. So
yep. So what do you
know what I'm saying?
What do you see the price action? Boom.
Yeah, exactly. Something like that. Exactly. Sweep and then displace down, and then you can confirmation on lower time frame to continuing.
That's what I'm seeing too. What do I have here? I know I marked here. What did I mark? Take profit one here for some reason. I think I was expecting the same thing for it to drop into this market structure over here. So I was looking at continuation of here, eat some liquidity, market structure shift, target this, my sell side liquidity. That's going to be the take profit. That's what I was targeting. And then depending on that, you're probably looking at, I don't know, probably let's do that. Probably like a 2 to 1, 2.85 to 1. That's going to be a nice move right there. Let's see on the weekly. Weekly has some.
It looks like it wants a 3 drive. It looks like it wants a 3 drive.
Yeah, look at that. I don't know. I don't even think it's going to close above that. Because it's already been.
It's going to be a wick. It's going to be a wick above it.
Yeah, it's already been tapped into.
Exactly. It's gonna be it's just gonna be a stop run just to clear those equal highs on the daily time frame that we've seen. I mean, or the lower time frame that we've seen nearby.
This has been tapped into, and this fair value has been tapped into. Yeah, man. I mean, I'm only comfortable doing it down to these two. So I do take profit 1 here, take profit 2 over here. There's nothing else. I don't see anything else, anything clearer. I'm gonna label it over here.
It's just on a straight up clean up trend.
Yeah,
so.
It really is. So 93.819, that's gonna be my TP1, and then 86.741, that's gonna be my TP2. That's how I feel comfortable. Those are gonna be the 2 different structures that I'm targeting. This fair value gap has been mitigated. Now, one thing with fair value gaps too, guys, I haven't taught you is inverted fair value gap. So this becomes kind of like a support and resistance. So once that's been mitigated, we wanted to see a break underneath that, right? We want to see do this price action break underneath it, and then it'll tap back into that area, and then continuation.
And then you'll see at the times, it'll make it more high probability if you see another fair value gap that forms on top of it.
On top of it. And
exactly.
With the bias, yep.
Exactly, because when it's inverting, it's just shifting order flow. You see what I'm saying? So that's going to confirm with the new bearish fair value gap on top of an inversion. See what I'm saying? So that's a good point out right there. Yeah. So you can get a clean inversion there.
Looks pretty ugly.
Major order flow.
Yeah, it looks pretty ugly, but you guys get the idea.
my boy's drawing, man, is hilarious. Come on.
I gotta learn how to use the little whatchamacallit, the indicator that does that. I forget how to do it. The path? Is it the path? This is gonna be a lot cleaner. I don't want to screw you guys up. Like that. And I'll probably tap into something there. Break through. Hit that. Alright. Alright, so you guys don't get too confused. There you go. And see something like that. And we'll leave it like that. So this is what it looks like on the weekly. So the daily, we want to see that sweep, and we want to see that price action start moving down. We want to see it interact with that inverted fair value gap. So like Jay said, we want to see a fair value gap forming in our price direction above it, and then it tap into this fair value gap, or even break through that, and then tap in the fair value gap that was formed, the newly formed fair value gap with the same price direction, and then continuation to the downside. Take profits on this are 93.819 and then also 86.741. For me, I mean, the way the price action moves is not my preferred choice when it comes to pairs, so I really don't trade too much AJ. Let's check out the 4 hour. Oh, that's beautiful.
It is. Bro, I'm telling you, this is why I like AJ. It's just very clean chart that it really does what you expect it to do. Like, really, you see what I'm saying? It really just follows your plan, because like, I mean, if you at least have a half decency of understanding what, like, you know, price action, that it will really just, it's easy to trade. It just goes with the flow. You know what I'm saying? It's not doing up, down, breaking both structures. It doesn't have a complex dual liquidation structures. You see what I'm saying? This just has a clean structure where it's just taking out highs each time, creating a lower low. Until it says otherwise, it's just gonna be an uptrend, and anything will just be a retracement. Simple as that. If that retracement now shows more bearish price action and gives a clean market structure shift, has a clear change in state of delivery, then it will confirm. It will confirm that okay, we're gonna now attack lower sell side liquidity and have actual bearish price action instead of just a retracement.
Exactly. I do see a nice little order block over here as well forming. Well, not forming, but formed. Equal highs there.
Yeah, but it shows equal highs. You see what I'm saying? It's definitely running that equal high. That's what it's coming to do right now. That's our draw right now. You see what I'm saying? That's our liquidity draw right here. So equal high. Boom. That's the draw. That's our target. So if anybody's longing it, that their target is to take those highs out. You see what I'm saying? So
exactly. Trend line is pretty cool. I mean, I would wait for it to actually play it on that zone and then look for my entry models, because I don't want to FOMO into it. I don't want to get like
exactly. You guys never want to do that. Always wait till it hits your level and you want to see it sweep that level. Okay, always. It's just a tip that I'll give you guys. If it closes above your level, just simply your trade is invalidated. It's literally simple as that. It's as simple as that. You wanted to see the price come to the white line that he just marked out, right? And you want to see a wick, like you really just want to see a sweep. You see what I'm saying? And then closing below that intended level, right? That will give you confirmation, and then you guys jump into your lower time frames to get your entry models. You see what I'm saying? That's when you will look for a market structure shift down on 5 minutes, right? You want to see bearish order flow coming in with the displacement down, creating fair value gaps. And then that will confirm you. That will give you your fib pulls. That will give you your dealing ranges to get your entry model to take it down lower with the better risk too, if you guys take it on a lower time frame. So
exactly.
And just do that every time. Like literally, just do that every time, and it will just most likely work most of the times. And those times that you lose, it's just minor loss.
Exactly.
Because you have your clear invalidation. You're not letting it draw down, buy more. You're not doing that. You see what I'm saying? So it will just be a simple, clean cut loss, and then you're just gonna accept it and move on to your next trade or your next pair, whatever.
I love when it gets invalidated, because then I'm like, oh, okay, well, I guess the bias just changed.
That's it. You know what I'm saying? At least it's not you're going in minus and minus and minus and minus and minus and minus. It's just you have your risk. You're putting 1 to get 3. Simple. If you lose this, you lose the 1. If you win that, you gain 3, which is your now standard 3 RR, right? That will be your 3 RR risk to reward. And if you can even just simply do that on any single trade that you guys take, even with the 40% win rate, you'll be profitable.
Dude, I have so my strategy is a little weird. I can probably show you.
Let me see how you've been cooking.
Oh no, this is like top secret shit. Like let me see. I've been crafting it out. I'll get in a call with you later. But what I target is like a 5.5 RR, and it has a 39% win rate, but it has a 43% year-over-year growth.
Exactly. It's not about the win rate, brother. It's really not. At the end of the day, win rate is just for shits and shows. It's for just shits and shows, because literally somebody could have a 90% win rate with the 1 RR average trade. Yeah, he's not making more money than somebody that has a 40% win rate with the 5 RR average. He's definitely not. And people don't understand that. Only real traders understand that, because they lose money and they make money and they understand that. You see what I'm saying? But the new people, they don't understand that. You see what I'm saying? And same goes with leverage. Leverage does not matter. It's your risk. It's your position size, what you're willing to risk for that reward. If that is clear for you and your entry model is clear for you, every single time you take on a trade, it'll be a calculated risk that you're taking instead of a gamble. That's when it becomes a gamble, when you have no plan, when you don't have an entry model, when you don't know what you're looking for, just no plan, And then one other thing, guys, like start to journal every single trade that you guys take, even starting from today. Get a notebook, write down trade number 1, starting from today, and literally physically write it down. Don't use, like softwares. Even an Excel sheet, it's not, you got to write it down. You know what I'm saying? It's got to be physical. Like, you gotta write it down with your own hands, with the pen, pencil, don't matter. Write down what happened, why you went in, how it went, what was your risk, what was your reward, and you'll start to form a data of yourself. And that's one thing that really helped me, like boost, mitigate your mistakes, because you get to study yourself instead of blame the market. This scam wick, this, which is, a lot of people do that. They blame the market, not themselves, for what they done wrong, And if it's a winner, always write it down too. Then you know how you won that trade. You can look for the similar things going forward.
It's also great too, like psychologically, because then when you're journaling trades, we're kind of lazy, right? People are kind of lazy at the end of the day. So the fact that you're like, oh, do I really want to journal this one? Is it good enough for me to like go through the effort of writing this down by hand? And then you second guess yourself, and then you're like, wait, you know what? This is not a good trade. So let me not risk doing this trade, because then I have to write all this stuff that how I failed, because I know for sure it's not a good trade. So it's actually good to, like, it keeps you in check too, because then you just don't trade just for the hell of it. You're trading because like, hey, I have to actually journal this after.
Exactly, it's serious. Oh shit, it's coming, eh? Oh shit, NQ. Why?
Yo, Fahad actually taught me this. Let me show you guys. Well, I already showed them, but let me show you, Jay. These are like NQ contracts, and it shows you like the actual all-time high. So it's kind of like the perpetual futures. So that's the price that what it was valued at one point, but not live price action. So like the live price action itself is this over here on the futures. So the all-time high was a 16,768, but the contracts actually got all the way up to 17,700. So it looks like right now we're going to sweep it in live price action at this level.
Yeah.
It's insane, bro. It's insane. And then I'm going to short the fuck out of it.
Yeah, bro, that thing is getting ready to fucking die, and it's been really going up for a whole year and a change, bro.
Dude, since like October was ridiculous.
No, bro, it's been going up since fucking last year, bro. It's been going up since last year, beginning of last year, bro.
Oh, you're true. But when it tapped it over here,
it's been just going, bro. I'm telling you, bro. I had spot on since like 13.8.
Damn. 13.8. I almost got it at 1400, man. I was so close. But yeah.
That's what I'm saying. It's been only up, literally. We just had a few months of retracements along the way and accumulations along the way. That's it.
Exactly.
So it's really it's time to take some liquidity out and sweep the external and really fucking displace down, and that's what we really want to see here. We want to see a clean displacement, huge volume candle with the fat fair value gap, you know what I'm saying, and a clean displacement, and then boom, your shorts are confirmed.
Hell
until then, it's just you're guessing the top until you see that.
Exactly, until it finally does a market structure shift.
Exactly. That's what people can't wait for. They try to catch the top wick, they want the top, but that's not the goal. Your goal is to understand your premium and discount and where you're gonna take it to, and you just want to get the best place, which are what Caesar is showing you guys, 75% areas, right? And I seen it when he was showing you guys earlier. So
exactly, the OTE.
Yep, just 75% area. You have the risk.
Alrighty, guys, thank you so much for joining me this Sunday night. It'll be the same time, same place next week, 7 p.m. Eastern Standard Time, New York session, right over here in the Easy Trades Discord, the Pro Discord. Thank you so much for joining me, guys, and make sure to have some questions lined up for me next week, and then also some pairs for us to look over together next week. Have a very profitable trading week, and thank you so much for joining me here tonight. Shout out to USMC Patriot 71 and also J Money. Thank you guys for joining us, the OGs.